Welcome, everyone. It is great to be with you today. My name is Taryn, and I'm a manager in the Knowledge and Learning team at A4S. I'm excited to be here co-hosting our Capitals Accounting webinar. Organizations are increasingly creating value through integrating natural and social capital into their decision-making, driving positive environmental, social, and financial outcomes. This interactive webinar will explore various aspects of capitals accounting and how it is being applied in practice. Our speakers will introduce the different elements of capitals accounting and examine its real-world applications. Please note that we are recording the webinar for others, and it will be made available on the A4S YouTube channel and website later this month. There are 3 learning objectives for this webinar. After completing today's event, you will be able to describe the risks to business arising from the wider capitals, gain insight into the latest developments from the Capitals Coalition, and translate the learnings of others from practical examples to your own work. Please also note that throughout the session, we will be running a few poll questions, which you will need to complete in order to gain CPE points. The webinar will last around 1 hour. We're going to have a short introduction and then head straight into a discussion with our guests to understand the implications for finance teams. There should be some time for Q&A at the end, so please do drop your questions into the chat function and we will do our best to answer these. Before we begin, we're going to start with a poll to understand the levels of integration. So, to what extent is your organization integrating the consideration of the broader capitals, natural, social, and human, into financial processes? Not at all. We are starting the process. We are developing an understanding of our impacts and dependencies. We are using tools like TNFD to inform risk assessments. All consideration of the broader capitals is well integrated within the financial processes. Results should pop up on screen soon. Okay, so it looks like 57% of you are just starting the process, and some of you are using tools like TNFD to inform risk assessments. Okay, that's good to see. Thanks everyone. And before we move on to our discussion, I want to introduce the guests who are joining us today. So we have Tom McKenna, who is a senior manager at the Capitals Coalition. Tom is an ecological economist and a senior manager at the Capitals Coalition, where he leads and supports project delivery for technical content, specifically on the integrated capitals approach and systems thinking. A large part of his recent work has focused on bringing together the natural capital protocol and the social and human capital protocol to develop a unified approach to understanding the interconnections, trade-offs, and synergies between all forms of capital. Welcome, Tom. And we also have Danielle Mulder, who is the Director of Sustainability at the BBC. Danielle is the Group Director of Sustainability at the BBC, and her role includes driving the BBC's net zero and climate risk strategy. She has also been instrumental in progressing the BBC's alignment to the Task Force on Nature-related Financial Disclosure framework and in developing an understanding of the social impacts of their programs. A warm welcome to both of you. I will now hand over to my colleague Helen for the panel discussion with our speakers.
Hey everybody, my name's Helen Wayne and I'm a Senior Manager in the Knowledge and Learning team at A4S. I'm delighted to be talking to our speakers today. I'm starting with Tom, who's going to give us a bit of a background to the Integrated Capitals Protocol. Tom, to start, I know there's a lot of work being done in the background, but could you give us an overview of what's being done on the Integrated Capitals Protocol, touching on its key components and also sharing some insights on how it could be used by finance professionals?
Yeah, sure. So what I'm going to do is I'm just going to share my screen because I've got a couple of slides just which can help sort of give a brief overview and introduction to the capitals and the integrated approach. So just just to recap what are the capitals. So at the Capitals Coalition, we see capital as being a productive source of value that provides value to people. So traditionally there's the financial or produced, but actually if you think about all the things in life which makes it worthwhile, that includes natural capital, which is the environment and nature. You have the social element of social and human capital, the social capital being the interconnections we have between each other, for example, which is based on sort of trust and cooperation. Human capital about the skills that a person might have and their ability to produce sort of outcomes and benefits that we want, and those can be either within the workplace or out with that. And then you've got your traditional produced capital as well. We're really looking at capital as being a stock from which you get flows. So the idea behind that is that it's something that you can draw down on, but actually you need to invest on it, and you can't degrade it too much, because then you're going to get to a point where it's no longer producing that value, and it can stop. This is just kind of showing that. So all the different types of flows, and then off the back of that, you end up with this kind of value. And some of that will be in terms which you'll know, like monetary value, and other types of value exist as well. I think it has identified up to 50 types of value that you might get from it, but I won't go into them here. So I guess just in terms of why we want to look at a capitals approach, this is a bit of a LinkedIn classic. It's people looking just at carbon benefits that they might be interested in. Obviously, climate change being sort of the biggest thing on people's radar at the moment, but actually if you just focus on carbon, then you miss out on all these other types of benefits that you might get. This one in particular is in relation to nature or natural capital, biodiversity in particular, but this is actually could be expanded further for all the sort of social benefits you might get from it by investing in people and in society as well. Just to sort of go over, I guess, the three elements of the capitals approach, which really make it different and are key to why we think it's important. A lot of I guess reporting within companies, businesses at the moment are focused more on the impacts. So where are we impacting the environment or people? But actually, it's highlighting that there are opportunities there, and that we depend on people and we depend on the environment as well. So the dependency side of things is actually one of the key elements of it as well, and understanding that is good for understanding risks and opportunities as well. Secondly is moving from measurement to value, so understanding not just what type of impacts and what just dependence we have, but actually the type of value that creates for your business and for society more widely as well. And then finally, just going from I guess silos to systems. So again, like looking at that kind of carbon tunnel approach or a financial approach, when you start focusing on getting just the one benefit, then you actually miss out on lots of other benefits that are there. So the idea is just really making visible those different trade-offs and the risks and opportunities, and actually allocating capital in the traditional sense. Where are you going to invest, whether it's time or effort or money, to get the best outcomes for your business, whether that's businesses or finance. So just a little bit on the integration. So we sort of make the case that conventional economic measures don't give us the information that we need to navigate, I guess, the polycrisis that we could argue that we're in. Too often we will be depleting sort of our natural capital, or there'll be exploitation of people for financial gains, but actually that creates a net loss for people as a society as well. So to reform that, we need a systems perspective on trying to understand all those different types of value as well. Just finally, just to answer that question and finish on my sort of introduction to the capitals approach. So we are trying to create sort of a new integrated way of looking at it, which we're calling the capitals protocol. So trying to see it all four different types of capital all together as a system, and then just to that we feel that will create the sort of integrated outcomes that's needed for sustainable decisions in the long term.
Great, thank you, and really helpful to have that kind of overview. And I think that tunnel vision slide and image is a really kind of interesting vision of view of kind of what could be happening at the moment with such a kind of hyper focus on climate, but kind of not thinking about the kind of wider impacts and the interconnectivity. And you kind of touched on produced capital and the link with monetary flows, but what would you say is kind of then there's lots of momentum on thinking about the wider picture in reporting requirements and standards and frameworks that are all kind of developing at the moment. From your perspective, what is the benefit for businesses and investors of thinking about these wider capitals, regardless of what's kind of happening in the reporting space?
Yeah, so I would say, yeah, the reporting space at the moment is very complicated. So the next slide is just to kind of just demonstrate, and this is from last year, so it's probably already a little bit out of date, but it just goes to show just yeah, it is quite a busy and complicated area, and this infinity loop is demonstrating how business, finance, and government all link to each other. And in particular, it demonstrates in the bottom left around how things like TNFD and sorry, TCFD, so it's Task Force of Climate-Related Financial Disclosures, all link in and create that link between business and finance as well. So yeah, it's a very complicated space at the moment, and so when we first formed in 2016, we developed something called the Natural Capital Protocol, which was used to feed into the Task Force Nature-Related Financial Disclosure. So yeah, I kind of got like a bit of a quick overview of just how they sort of overlap with each other. So I guess the key message is just that business and finance do depend on nature in one way or another, as if you go back far enough in your value chain, just businesses as usual is no longer an option. It's not a CSR issue, it's actually a strategic management issue, and it's going back to these ideas about dependencies and actually understanding where you depend on the environment. So yeah, it helps to look just at the impacts, but also the dependencies as well. Yeah. So the next slide is yeah, just sort of just demonstrating, I guess, like how these all link in together as well. The TNFD and IFRS and GRI, which are all kind of disclosure frameworks which are coming in as well. And just yeah, the need to report back to the Global Biodiversity Framework and the Paris Agreement as well.
I think it's
yeah.
really helpful to kind of get that view of the landscape of reporting and how everything kind of fits together, because there's so many different reporting frameworks and standards hitting kind of reporters. So it's useful to kind of understand the connectivity between them.
Yes, yeah, and I think this infinity loop here is just like a really key way of just demonstrating just where they all link with each other. Because so there's this idea of ACT-D, which is assess, commit, allocate, and disclose, which is just sort of yeah, assessing what impacts and dependencies you have, making commitments. So within finance, the financial biodiversity finance commitments would be that, or within business, you might have your science-based targets, for example. Your transform or allocate would be around the actual actions that you take and how you might act on that information, and then the disclosure at the end of that is around what have you done and demonstrating that, and whether that's disclosing in a formal setting, whether that's disclosing internally for management purposes, whether that's disclosing almost as a way of demonstrating to the wider society as to what you've done and the kind of impacts that you're having as well.
Yeah, that's a really interesting slide, and does just show you kind of the complexity of how these things kind of fit together. And so you're thinking about the kind of the wider benefits for businesses and investors, because I think a lot of people who are on the call might be coming this from the reporting perspective, but just the kind of in the kind of the bigger context, why is it important to consider those wider capitals regardless of kind of how reporting is changing?
Yeah, so I guess I sort of was thinking about this question a little bit around the motivation for businesses to carry out a capitals assessment. And I think there is always the idea that realistically, at the moment in the current, I guess, system that we operate in, the businesses are underpinned by their financial performance, and that's just a reality of the world. But there are lots and lots of really good motivations for why you might want to do it. So in terms of the integrated protocol, I guess our audience is at the moment going to be sort of on a voluntary basis, and that's yeah, so that's more from the integrated perspective, but actually the disclosure for TNFD is sort of coming in, and it's becoming a lot more mainstream. So it's a good way of getting ahead of the curve, for example, as well, and understanding that the direction of travel as well is moving towards this disclosure and understanding your impacts and dependencies. So there's a reduction in risk. It's understanding those dependencies as well. So understanding where your business is dependent on stuff and your standard, I guess, assessments might not pick that up, for example. So if you look far enough back in your business chain, or for example, you're thinking about making a decision of, say, opening a factory in an area where you're reliant on the water source, but climate change might be, making droughts more likely. So that water source might dry up. That creates an inherent risk for your business, for example, as well. The protocols really, the idea is to focus on decision making, so understanding these values more widely and understanding how we can make sustainable outcomes. So especially around the human and social capital, so understanding how the business impacts that you're having and the dependencies that you have in the local area, it can create, I guess, more equitable and more accepted outcomes as well. So you reduce, for example, the risk of conflicts in your local area or conflicts between different stakeholder groups as well. And then finally, towards, as I say, towards standardization, towards assurance. So getting ahead of that curve and helping actually to set the standards themselves. With this obviously in the development phase now with things like TNFD and TISFD. So yeah, this is a good way of influencing that and helping to develop that space as well.
Great, thank you. Yeah, and I think that's a really important point to kind of acknowledge, is that we're still in this kind of development stage for a lot of that building of best practice. So kind of contributing to that is a really important element of being involved in the discussion. And you've touched on kind of impacts and dependencies. And it's a really important terminology, I think, which a lot of finance professionals might be kind of getting to grips with. Is there, or could you set up what they kind of mean and also touch on the connection with risks and opportunities, and maybe perhaps provide a couple of examples to really kind of set out what it looks like in practice?
Yeah, sure. I have a couple just of slides just actually the next one's a little bit better, just to give you some examples of impacts and dependencies. So as I've already talked about, there's 4 different types of capital that we use, but you can use less. You can use 3, or you can use up to 6. I've seen multiple more. But just in terms of the impacts that your business might have, and this is in relation to food, because we ran sort of a TEEP agri-food piece of work. The produced capital impacts might be around profits or income or taxes. Social capital would be things like social security or cooperation. Natural capital is around your impacts on the environment. So you might have pollution or you might have habitat loss, for example, as well. And then human capital as well as the impacts you have on the individual. So wages you might have for your workers, or the nutrition within the food that you're creating as well, and the working conditions for your workers as well. And then the dependencies on the other side of things. So these are all the things that you depend on from these different types of capital as well, and the reasons that you need to invest in it. So social capital is around consumer trust, social license to operate, for example, your relationship with your farmers or your value chain, for example, land tenure as part of that. Your natural capital, so nutrient cycling. If you've got no soil that's useful, that can grow stuff, then it's just your business is going to go bust. And there's a similar example to the water example I gave earlier. Biodiversity is important for things like pollination and pest control. Human capital, so your labour force, for example, they need to be skilled, they need expertise, and they need knowledge in order to produce food as well. And then finally, your traditional produced capital, the stuff that I guess would normally be on your balance sheet, so the machinery, the fertilizers, and the finance that goes behind that as well. And then I'll just quickly just go over this sort of diagram, which is a pretty standard capital coalition diagram, but it's just sort of demonstrating how all the different capitals are linked to each other, and then you have impacts and dependencies on business, but also then on society, and those impacts and dependencies have costs and benefits to those different groups. And the societal ones are ones that aren't normally picked up, but would be picked up in a capitals assessment, for example. So for businesses, those costs and benefits, whether it's to the business themselves or to society, do create those risks and opportunities. And I think that's the key thing, the risks and opportunities. The risks, for the capital not producing that value as you'd expect it to in the past, but actually opportunities as well. Where can you invest in natural capital further upstream, for example, which might create sort of better water flows or better quality products, for example. So these are key ways to differentiate as well within your markets as well. And then finally, the finance sector, which I guess is kind of that level up, which is what people are interested in here, but it relies on the businesses and society operating as well, and that the finance sector will look at those businesses and society as well, and it will assess risk based off the back of that as well. So yeah, this is just I guess demonstrating that in relation to natural capital, and these are all, I guess, the pressures that you might have on the land that you rely on. And right at the end of that, the value chain there, you've got your risks and opportunities, which will feed into your business model and your value chain. And then that will change your impact drivers, the actual business activities that you're creating, which hopefully will create a better state of nature, which in turn will create better ecosystem services of the benefits of nature that you're getting. So yeah, I probably won't go into this in too much detail, but yeah, here's just to demonstrate that there are positives and negatives to any impacts and dependencies that you can have on the environment. And this is sort of using those pressure points again, just to demonstrate that businesses can do positive in the same way that they do negative as well. And that's about investing. And this is always going to create sort of, it's always going to create opportunities for businesses to not only do good for, I guess, the societal value, but it is also creating private value as well. So yeah, I'll stop there.
Great, thank you. Yeah, it's really interesting to kind of get the terminology and to think about how it links with business risks and opportunities. And that dependency point is probably one that a lot of organizations may not kind of consider at the moment, but a really important one as kind of ecosystems are shifting. And there's lots of really great examples on the Capitals Coalition website. Are there any that you can talk through to kind of showcase how some organizations are embedding consideration of the wider capitals into business thinking, particularly looking at that finance standpoint?
Yeah, so just for those that on the call, I put the URL here, but I would just Google case studies, Capitals Coalition, and we have a whole database of case studies if people are interested online to just go and have a look. So yeah, there's lots of case studies, but one in particular that was highlighted by my team is one of Forico, which is they used the natural capital protocol to do a net impact assessment, and they did it in 5 steps. And the last one is just that kind of clear sort of reporting or message. But first off, yeah, they looked at the materiality of their business activities, and they ranked them, and they looked to see which ones were important and which ones they needed to map further. So the second phase was understanding that value that those business activities had to their own business and to society more broadly. So they kind of mapped their business activities and then how they sort of interacted with each other as well. And at the end of that, they kind of created these risks and opportunities at the bottom. So yeah, around like pulp and paper, for example, and trying to understand where they had liabilities and where they had opportunities and where their value was being created from, kind of broadly, which is where number 3 comes in, which is kind of this what's called an integrated profit and loss account, which is sort of looking at the different types of value they're creating, whether that's to society or to business itself. So I think the quality of the photo isn't great, but it sort of talks about sort of total environmental liabilities, whether that's from a private or a social or perspective, and then also the assets as well. So looking at, again, that stock and that ability of the resources they have to provide benefits now and into the future, and trying to understand where it might be good to invest as well. So this was assured through KPMG in a report. And then finally, number 5 is just reporting, and just a couple of key takeaways there, just that they were able to demonstrate that the flow of natural capital benefits was $158 million in that 1 year. But actually, if you look at the natural capital as a stock, it was worth $3.38 billion And so the tip of the iceberg was 413 million business value, but there is actually so much more value being created by the company, and being able to demonstrate almost $3 billion worth of value to society was a really, really key way of demonstrating their value as part of their wider society as well.
Yeah, it's really interesting, the concept of kind of the integrated balance sheet and actually putting a value to some of these kind of intangible, wider societal benefits. I think it's definitely an interesting area to be exploring. And we hear a lot about climate and nature, but less about social value. Could you delve into how the Capitals Coalition could support organisations looking at social value and describe the various methodologies, including monetary, which could support with that measurement and ultimately decision making?
Yeah, sure. So I guess social and human capital, so that probably is under the umbrella of that social value. It's probably the area that has been assessed less. The natural capital space is much more developed. We have the Task Force Nature-related Financial Disclosures and the Task Force of Climate-related Financial Disclosures. There is a task force for inequality and social-related financial disclosures that is being set up and is underway. So in terms of like measuring it, I would say that, sorry, I'm going to move past, I didn't go over this in the last round. As I said, we did produce something called the Human and Social Capital Protocol back in 2018, which is a really good starting point to actually do this. So understanding that sort of the stock of resources that you have and the impacts that you have on it, and then creating the value off the back of that. I would, sorry. I'll go past these actually. Just to, so the social capital, it's a lot, as I say, it's a lot harder to measure tangibly. So you might find that a lot more of the value that you're creating is having to be assessed in quantitative or qualitative values, whereas a lot of the natural capital benefits are, as shown in the last example, able to be monetized. So you might only be able to capture sort of positive or negative. Actually, there was quite a good example of this here. So this is in relation to natural capital, but just it does demonstrate the qualitative valuation. So it might be positive, negative, or neutral, for example. So it's very broad, but you still understand those impacts that you're having. Within the space, there's a lot more uncertainty as well, but that's not an issue if you're able to capture that and you're able to demonstrate that in your accounts as well. So even if it's even if it's just in the right magnitude, that's useful. So for example, understanding your the amount of injuries that's likely in the workplace. If you know it's between 1 and 10, that's still useful that you know that it's not between 10 and 100 or between 0 and 1 as well. So sorry, I'm just gonna make sure I haven't.
I think it's really useful to kind of understand how the different ways that things could be measured, because I think as accountants we have a tendency to kind of look to the monetary or the quantified, but actually it's useful to kind of understand how the qualitative discussion can also add to the picture.
Yeah, and I think ultimately the capitals approach is about demonstrating and trying to highlight those different types of values. So if it's not in monetary accounts, that does make it difficult to compare that then with your financial accounts, but it can highlight different risks. And actually one of the key outcomes of kind of one of the early drafts of the integrated protocol that we've had is actually understanding how all of the different elements of your different stocks, whether they're natural, human, social, or produced, just understanding how they relate to each other, and the sort of if you increase one and how that trade-off creates trade-offs with the other, is actually just as useful as understanding the flows of the stocks at the end of it as well. So it's really just about that decision making and trying to incorporate as many different types of value as possible into that decision, and trying to plan for the future and understanding how decisions made now will impact you in the future as well.
Great, thank you so much for that overview. It's a lot of information to digest, but I think it's a really good starting point for organisations who might be starting to look at the wider capitals. So thank you so much for your time today. Before we move to a discussion with Danielle, we're going to run a poll to just consider some of the discussion that we've had. So what types of measures can be used by finance teams when making decisions? Qualitative, quantitative, monetary, looking at shareholder value, monetary, looking at societal value. Tick all that apply. So we'll end the poll there, and many of you got the right answers. So across the board, all of these are various ways that you can use to demonstrate value, and lots of people recognize that with high selection of all of the different responses. So we're now going to move on to a discussion with Danielle Mulder, who'll be giving us the corporate view on how some of these principles can be integrated within an organization. Welcome, Danielle.
Hey, good morning. Thanks for having me.
Our pleasure. So we've heard from Tom on the importance of considering impacts and dependencies, but putting that into practice in a business might be kind of a little bit more difficult. So how did the BBC determine what was relevant for them, and how could other organisations start on this process?
Yeah, sure, no problem. I've got some slides, Helen, but feel free to ask those, questions as we go through this. Absolutely no problem about the approach that we've taken here at the BBC. So our strategy, this has actually got 3 pillars. So this sort of sets it up really in terms of how we think about this. We've got nature positive, net zero, and people positive. This is our sustainability strategy. So you can see our strategy from the top down picks up this sort of nature piece, sort of the natural capital. And then we've got people positive, which picks up the social capital as well. So we haven't just taken a sort of carbon approach to this, to sustainability and our response to it. And this is how we sort of start the conversation, if you like, about how our strategy is set up. So what we've done on the nature positive pillar is we piloted TNFD, the Task Force for Nature Financial Disclosures, and Tom mentioned it earlier as a framework for doing this, for sort of bringing it into sight. And what that framework does helpfully is it requires you to locate and evaluate your interface with nature. So you basically got to measure your impact on nature or biodiversity. So what we've got in front of us here is a biodiversity footprint for the BBC. Yeah. And we adopted a life cycle assessment to do this. And helpfully, we used the same data sets that we used to calculate our carbon emissions. So in terms of our fuel and our electricity and our procurement spend and our business travel, our investments, et cetera, et cetera, et cetera, and we push that through a life cycle assessment model and system, and then that enabled us to get sight of all the other impact categories. And so not just GHG emissions or that carbon piece, but also all the other impact categories as well, that include things like eutrophication, smog formation, resource use, water, land use, etc., etc. And that's how we can get sight of this in terms of what we can directly control, which, as I guess there's no surprise here, that the big area of impact that we have on nature is actually in our scope 3, so more of the indirects that sort of sit in data sets such as our sort of procurement and our supply chain. And then we took that model and we calculated what we call, using LCA, the midpoint pressure points, so sort of life cycle assessment speak. And then we actually developed that, turned that into a metric to convert that into what impact we're having on biodiversity itself, on species loss, into a species.year metric. So we are going to publish this actually eventually. I'm going to get permission, but we're going to put on our website exactly the methodology that we deployed into this and the results that we have for calculating our biodiversity footprint, because I think it's hopefully a useful way and gives sight to people of how to do this. We're getting into the how now. We've got the theory, we know we need to do it, we know it's important. Why is it important? What does it bring to business in terms of business benefit? And you have to measure it and locate and evaluate your interface with nature. So you can see here what this does is it's sort of like the midpoint pressure points that we've looked at in particular are air pollution, carbon emissions, as you'd expect, land use, water pollution, and water use. Yeah. And where those sit in our business, the hotspots, if you like. And then we've actually used the scope 3 or GHG accounting categorization to bring that into sight as to what the hotspots are. Yeah. With a particular sort of focus and interest around sort of land use, because we in the background, we've also been looking at science-based targets for nature, and in particular their land their land-based targets as well, and how they could be deployed at the BBC, because we think there's a really good fit there. Yeah, because we've got lots of offices. We're not a mining company. We're not a big extraction company. We're not oil and gas. We're not a fast-moving consumer goods organization. We're a media company and a tech company, really. And so therefore, what you have to do is figure out your sector, what's relevant for your sector, but also what's particularly material for your business as well. What are the risks, but also what are the opportunities as well, of getting this right. So this is the approach that we've taken, and I think there was a question in the Q&A, and please do fire questions. I love a chat rather than just presenting. Is that we've taken this approach and determined, what our impact is, and we've got lots more to do, by the way, because what you realise with the LCA approach is it takes you into the sort of hot spotting. But really where you need to get to is you need to get behind the data and get to the next level down, particularly if the lion's share of your problem sits in your supply chain. You actually need to understand, where do those products and services come from? What are the manufacturing sites? Where are your operations globally? And I'll come on to that. Where do we film? Where are we having that localized impact? So the nature piece is much more localized than the global problem of generating emissions and climate change. Yeah. And so what we've
it's a
done
really
with that,
interesting point, thinking about that supply chain piece and making sure that kind of the scope is almost scope 3, but for nature, kind of thinking about looking through the supply chains to where you're having an impact or a dependency.
So what we did is we did the analysis, we refined it actually. So we've done it a few times now using LCA. Now we're sort of getting into, right, let's try and get behind this, sort of like, let's get into the transparency of the supply chain data, and sort of, where the materials themselves come from, where potentially, our data centers are, where are they actually based, because we have a huge dependency on tech at the BBC because we're a media company. Where does that tech equipment get manufactured? Where does it come from? Where does our catering come from? Where does the chicken that we eat come from? When we go filming, where do those materials that we're taking, to build sets, for example, where do they come from, and what's the impact of those? So you really have to get into this and start building it out, with an initial focus on your hotspots and what you can do about it. So we ran some workshops across the BBC to bring that into sight, because we don't think that offsetting is the immediate alleviator that you should go for. And it's the same in nature. It's the same for carbon. We've adopted science-based targets on purpose because we believe in deep decarbonisation, and you have to get rid of the emissions, and we have to get rid of the emissions forever, rather than having an offsetting or compensation strategy from the impact that we have. And it's the same in nature, right? So we want to actually mitigate that impact first before we jump on the compensation lever. And what we found helpfully is we've tried to bring this into sight with some of the initiatives, is some of those initiatives to actually sort of mitigate our impact on nature, such as eliminating diesel from our production, from our diesel generators that we use on our production. Yeah, that has a corresponding impact benefit to carbon, because if we switch to HVO, for example, which is hydrogenated vegetable oil solutions for energy generation, or we switch to batteries, or we switch to hydrogen, then that has a benefit for carbon, great, you actually start to decarbonize, but it also has a corresponding benefit for air pollution as well. So we're finding that there's really useful synergies by adopting these decarbonization strategies and mitigation strategies on nature that come together and that can benefit both.
I think that's a really helpful point. Sorry, just to demystify the kind of the link, and I think you also talked about how the tool you can kind of use your carbon emissions or kind of the things you have available already for reporting as a starting point, which is quite a helpful kind of way to reduce the fear, I suppose, of the kind of big task that might come to mind when you're thinking about how to kind of respond to some of these nature-related reporting requirements.
Yeah, I really think so. I think that, the point is, get started, get doing it, figure out your interface with nature, and then all of this will start to come into sight, and then it stops being, a sort of anxiety, and what is it going to be? Is it going to be, how are we going to cope with this? It's an additional sort of skill set and resource. And we adopted the TNFD and we piloted it, and we also worked with EY. So they've got a NAT tool. I think it's called a natural asset tool. And we basically brought into sight all of our operational sites, or offices, if you like, because we've got 225 offices across the globe, and that includes we've got lots of offices obviously in the UK, everything from radio stations to our bigger hubs that we have across the UK, but we've also got international news bureaus scattered across the globe. We've got BBC Media Action scattered across the globe. We've got BBC Studios, they have production sites scattered across the globe, etc. And we put them all into this tool, and then we figured out those sites in terms of their proximity to low integrity biodiversity areas, areas that we should be concerned about and worried about, and what our impact potentially could be on those sites by having an office or a presence in that biome. So that's what the NAT tool does. It's got the biomes here, as you can see on this map, and then we put all of our office sites into that tool, and then determined the proximity to low integrity areas as well. So that's one exercise I went through. Then we looked at our risks and opportunities, which is exactly what we do on the Task Force for Climate Financial Disclosures, the TCFD framework. And then we tried to figure out what's the crossover with that. Are there additional risks and opportunities that are just pertinent and relevant for nature, or actually are they the same risks and opportunities? And there was huge crossover. There was a couple of extra ones actually in terms of risks and opportunities, and they were largely around the supply chain risk, which goes a little bit deeper, and that more localized issue that we have. So if it's okay to continue, so we did all this work piloting,
definitely. This is really
figuring it
interesting
out, did the biodiversity footprint as a starting point, refined that, figured out what the mitigation strategies were, pushed everything into this NAT tool, looked at our risks and opportunities. And then in the background, as I said, we were evaluating what metrics and targets, which TNFD encourages you to do on the area of nature. What do we want to measure ourselves against, and what do we want to target potentially? And we found that the TNFD actually advocated the use of LCA, so we're all good there. We were using the right system, if you like, to measure ourselves. And then we looked at the science-based targets for land. Now the BBC this isn't mandatory for the BBC to set these targets. This is optional at the moment. I think some of that will change over time, as we're seeing that a lot of this is a ratchet system going on at the moment in terms of regulation and what people are expected to do in this area. But we found that some of these targets on land could be particularly relevant for the BBC. So they are no conversion of ecosystems. So how can we ensure that as a business, we're not converting land use, for example, for our purposes, and destroying rainforests, for example, for the benefit of the BBC? How can we reduce our land footprint? So do we need all those offices everywhere? Are they the appropriate size? Is there an opportunity to rationalize some of those offices, and then we don't have such a big land footprint? And then the third one is about landscape engagement. So given the impact we have and that we've mitigated as much as we can, how can we actually make some investments in landscape engagement to support the halt and restore obligations that are on all of us actually, but particularly on the BBC in terms of our programming. So this is a summation, if you like, and I shared this with our executive committee on why we need to do this, what the key drivers are. We have a halt and reverse policy here in the UK, and they are legally binding Environment Act targets. Regulation is already here, as we know. There is an opportunity to bring carbon and nature together, not in a fudgy, offsotty way, but in a way that this is required of us now, and as a responsible business we need to bring the natural capital into sight. But as I said, there's an opportunity to do this in a holistic way where you can actually optimize it and get economies of scale by doing the things that we talked about in terms of reducing our land footprint, eliminating diesel and fossil fuels from our offices and our production. That has a corresponding benefit for nature as well. And then if we do all of this well and credibly and adopt the right standards and have it assured, then we can actually achieve a position of nature neutrality or nature positive in the future. Now that definition is not there yet. I think there's several definitions around what nature positive means, but there isn't a sort of standard, if you like, determining that. But we still think that that's going to come, and that the direction of travel is very much into this, that we all need to take responsibility for the impact we have, neutralize that as much as we can through that mitigation first approach, but then actually ideally achieve a position where we're doing more good for nature than harm, and credibly achieving a nature positive position. And that all matters to the BBC, not because we're a mining and extraction company, but because we cannot say that we don't understand the topic. We do understand the topic, and we talk about it all the time in our brilliant output. everything from David Attenborough talking about, you know, the extinction risk that we're facing into and the rapid species loss, from Green Planet to the Wild Isles series that was very specific to the UK, and to our news output as well, in terms of the coverage that we have around, you know, the COPs for biodiversity, etc., etc. So that's why it's important. It's brand reputation for the BBC, and that's why we've taken this approach.
Fantastic. I think that's an incredibly helpful step-by-step kind of way to support people who might be starting on this journey, and kind of putting it into a very clear trajectory using the frameworks that are available to kind of guide you through the process. So we've talked a lot about nature, but when it comes to social capital, could you talk about what this means for the BBC and how it could be measured?
Yeah, sure. So social is less developed for us at the moment because we're sort of feeling our way on how we're going to do this. So, obviously our product is media and programming. That's what we do as an organisation. So what we've done is we've actually we've adopted impact analysis against some of our programs, and we started doing it against some of our NHU output, our natural history unit output, because, you know, it's particularly kind of relevant in terms of the environment, which comes under my remit, the E, if you like, of E, S, and G in terms of our environmental programming, and that people positive pillar, yeah, the impact of our environmental programming and output, you know, on our audiences, yeah, and whether to ask the question about whether it informs and educates, which is the purpose of the BBC, but also inspires people to make a change as a result of that programming. And so we actually worked with a company called Symmetrica Jacobs, and so I've worked with this team previously actually, and deployed what we call impact analysis or regression analysis. So the BBC is really good at running surveys. We run them all the time. We've got an audience monitoring team that pretty much tracks what we're all watching on the BBC platforms in terms of what age we are, what socioeconomic demographic we are, etc., etc. And we can lean into that expertise, if you like, the audience monitoring piece, and then actually start to deploy some additional questions and regression analysis, which basically is essentially some clever maths to determine coefficients around, as a result of watching a particular program, has it led you to change your behavior? Yeah. So you can see here, these are some of the questions. Does it make the viewers appreciate nature more? What's their connectedness to nature? Does it change their intentions? Does it change their behavior? And does it improve their well-being? We were sort of targeting some particular questions, if you like, and outcomes that we wanted to go after. And then you end up with these coefficients. So we run what we call a frontline survey. So we ask questions up front prior to watching Green Planet, and then we ran endline surveys as well to say, as a result of watching the program, you know, counterfactual, can we ensure that the behavior change or the you know, the response to this question is as a result of watching the program? Yeah, so that's how we did it. And then Symmetrica Jacobs have some pretty clever maths to do this. And you can see some of the results here, you know, in terms of, you know, people responding to the program and, you know, more likely to go for a walk or cycle compared to non-viewers, you know, more likely to go to the park, using less plastic, buying less clothes, etc., etc. And these coefficients were reported as a result of that work. Yeah. So this is how and then we also tested them on a number of nature statements, you know, how much they love nature, being in nature, etc., etc., and what our role is, you know, do agree. And you can see in this analysis that people that watched the program had a response to it. It's very clear. How long that response lasts, that's the next question that we want to ask. Actually, we want to do more of a longitudinal study that sort of says, that's great, as a result of watching this program, we had a response to it, but how long does that effect actually last? So this is the work that we did, and we also wanted to monetize it. So we didn't want to, we've got lots of qualitative statements there and coefficients that we did using the clever maths, but what is the actual business benefit to the BBC as a result of commissioning and producing and you know, transmitting this program? Yeah. And so the team at Symmetrica Jacobs, they use sort of social value, you know, and they actually are very much aligned to the HM Treasury Green, but I think Danielle, who started that company, actually, you know, was a key author in that analysis there. So then we started to get into willingness to pay. You know, if you had to pay for that particular program, what would your willingness to pay, and bring that into science? This is the monetization of the quantitative analysis that we undertook. And then also, in addition to that, I haven't got a slide on it, but we also looked at something called GVA as well, which is the gross value added contribution to the UK economy. So as a result of producing that programme, you know, what was the economic benefit to the UK? Yeah. So we've taken it very much from a programme point of view, and then we built on that, and we also ran this very similar. We learned from that process, by the way, a hell of a lot. And then we built on that, and then we deployed it also against Wild Isles, which was a sort of the UK nature programme, hopefully some of you saw. And then we could bring into sight some of these metrics that we wanted to capture here in terms of audience, how many people watched it, how many people consumed it, you know, at a societal level, you know, what changes did it generate in terms of behaviour, and can we monetize those using the framework of the HM Treasury Green Book, and also calculated the GVA. So what's the contribution of that programme to the UK economy as well. So we're starting to get in a framework, if you like, into sight here. It's very much a sort of programme approach, and we need to roll that up now into, imagine all of our output, doing this against all of our output. I mean, it's a pretty tough question, guys, to do this for the BBC, you know, in terms of news output, radio output, you know, programme. But this is how we've tackled it, and we can do it. You know, and we're also starting to get in. So we took a partnership approach on Wild Isles. It was quite unique. We went that step further. We had an official partnership with the RSPB, WWF, and the National Trust as well. And then where we are up to now is we created the inciting moment, if you like, and generated that value as a result of that programme. But what value did it generate for our partners as a result of that programme? You know, did it activate public discourse in the UK? And as a result of that, people went on and did great things with the RSPB, WWF, and the National Trust, because we were working together on that and activating that conversation, and then that ongoing journey into what people can do in their communities, and working with those charities in particular. And it was particularly effective, actually. We found that there was the response to that, and the partnership model basically amplified our impact. And the challenge is to measure that in a credible way, yeah, that stands up to scrutiny, because different organisations sometimes use different measurement systems. So we've got to get alignment to do that. But that's where we're up to, and that's how we're thinking about this. And on the back of that, actually, we've actually created a campaign around becoming a voice of nature as well, which some of you may have seen as a result of Planet Earth 3. So all of this work is really trying to, I'll stop sharing there if that's okay. It's all very well measuring stuff, but you've got to bring it into, you've got to make it a benefit. You know, why are we actually doing this? And I'm a big believer of that, in terms of, you know, quantifying the business benefit of doing this and getting it right, and obviously reducing the negatives that you have potentially as well.
Yeah, I think that's a really important point to finish on, is that kind of the outcomes focus. So regarding the reporting, there's a lot of alphabet soup around at the moment,
Yeah.
but what does your business want to achieve, and how does it
Why
want
are we
to kind
doing
of
it?
leave a positive imprint?
Yeah.
Great. Thank you so much for running through those the work you've been doing. It's a really interesting way to communicate how to put some of these things into practice. So I think it'll be really helpful for our listeners. If you're interested in finding out more about these areas, I recommend the A4S Essential Guide to Social and Human Capital Accounting, as well as the Natural and Social Capital Accounting, as there are lots of good examples and further explanations, and we'll share the links in the chat. We're going to move on to a Q&A in a moment, so if you do have any questions, please do put your answers into the chat box, and we'll try to address them shortly. We're just going to first run a quick poll to consider some of the discussions you've had to date, so please do respond to the poll, which will be popping up on your screen. So what role does finance play, or could finance play, in embedding consideration of the wider capitals into business processes? Do you collaborate closely with sustainability teams to define appropriate metrics? Work with sustainability teams to develop a shared understanding of what the wider capitals mean for the organisation? Support the development of robust data collection systems for sustainability-related data information, or provide expertise in financial management to embed consideration of the wider capitals within organisational processes? Thank you for responding. All of these are correct, which is reflected in the responses. If you stop the poll and share the results, you can see that the majority of you have selected all of them as the correct answers. So thank you so much. So for the Q&A, we don't have a huge amount of time, but perhaps we could just touch on perhaps top tips from both Tom and Danielle, and then move to Karen. We do have a few questions in the chat, which I can see, Danielle, you were kind of responding to, or if you have top tips or takeaways would be fantastic.
Yeah, sure. From me first. Yeah, that's absolutely
Yes,
fine.
yeah.
I think with all of this, I'm a big believer of keeping this pragmatic. I mean, I know there's lots of regulation around this that's driving activity, which is great. But I'm also a little bit cautious about reporting for reporting's sake. I really am that person that sort of says, why are we doing this? Let's ask the question about what's the benefit of us, which is why you need to particularly think of not just about your sector, but also your business type and what you're doing as a business. Yeah. And I think that the key point is just get started, and I lean into experts all the time, yeah, to deliver this, because I know that I need them, so on the nature side, for example, I worked with a team at Oxford University and a guy called Joseph Bull, and we adopted the life cycle assessment approach, to do this, which was aligned to TNFD. On TNFD itself, I got a lot of help from EY. I lent into them and their team and their tools that they were using to pilot TNFD. In the future, I've actually got a workshop with a company called Finance Earth on the 17th of April, and we're going to be working with those guys on bringing our investment strategy into sight in terms of that landscape engagement piece, and how, what is the cost to the BBC of adopting a position such as nature neutrality and nature positive, and bring that into sight so that we can have a proper conversation with the executive about it. So I guess my top tip is don't try to do this on your own. Make it absolutely relevant, and I think if you do that, it will deliver benefit for you and be worth it. Yeah, the investment
Great.
that you need to make. Yeah.
Yeah, thank you. I think that's a really valuable point, kind of helping gathering people around you to support you.
Yeah.
And Tom, just quick, do you have kind of a couple of top tips?
Yeah, I think just to kind of mirror what Danielle said there, is just to get started, just give it a go. Don't worry too much about if it's very accurate or inaccurate. If you just understand the relationships you have between different types of capital, between your different impacts and dependencies, that's important. You can manage uncertainty, and it's those relationships and how things interact with each other, which is probably most important. So yeah, if you give it a go now, then you'll be ahead of the curve when it inevitably comes in the future as well.
Great, thank you. Thank you so much as well for your time this morning. It's been really interesting to hear your perspectives. I'm going to hand back to Taryn for a quick wrap up. So pleasure having you all, and I hope you enjoyed the session.
Thanks, Helen. Thank you to our panelists for their contributions today. And as Helen mentioned, if you are interested in finding out more on this topic, we've got a range of resources on our website, including our essential guides. The links for those have already been shared. Case studies from Yorkshire Water, GSK and OLAM. We have maturity maps for social, human and natural capital accounting, so you can assess where your organization lies in terms of maturity. We also have worked examples created by members of the Canadian chapter of the A4S CFO Leadership Network, which shows how they have implemented social and human capital accounting within their respective organizations. And the links for these are now being shared in the chat. Applications are also open for the A4S Academy. For those that don't know, the A4S Academy is a program designed to empower and equip senior finance professionals with the skills needed for their businesses to succeed. You can apply via the website, which is now being shared in the chat as well, but please do apply soon as the application window closes on the 29th of March, which is tomorrow. Our final information session, where you can hear from previous participants and what to expect on the program, was held on the 5th of March, and the link to this recording is now also being shared. Before we close, we just have two final poll questions. So the first one should appear on screen shortly, which is what are the commercial benefits of using a capitals accounting approach? Please tick all that apply. There can be more than one correct answer. So all of these answers are actually correct, which I can see most of you got. So thank you. And now on to our final poll, which is just based on your experience today, how likely are you to recommend an Accounting for Sustainability Action webinar to a colleague or a peer, 1 being not at all and 10 being highly likely. I'll give you time to just submit your answers. I just wanted to say thank you so much for joining the discussion, and thank you again to our guests, Tom and Danielle. To our participants, if you haven't already registered, we have a strategic planning, budgeting and forecasting webinar, which is taking place on the 23rd of May. And the link to register for this is now also being shared in the chat. I look forward to seeing you at the next session. Thanks all.